Mark, over to you.
Thank you, Seng-Yao. Good afternoon, everyone. Welcome to a panel discussion where we talk about crypto, one of the biggest themes in 2022. In the next hour, we will hear from panelists on how asset managers and family offices in Asia can and should think about positioning their portfolio and investment strategies for this rising asset class. We'll start today by inviting our panel to share their elevator pitch about themselves and their roles in crypto. Dato, could we start you off first?
Sure. Thank you so much, Mark. And thanks to Maybank Invest ASEAN 2022 for having us today. I'm Fazli. I'm the CEO of MX Global. We are a licensed digital asset exchange, or really more in crypto terms, what they call a SEC, a centralized exchange based out of Kuala Lumpur, Malaysia. We've been licensed by the Securities Commission Malaysia since July 2021. And prior to that, I served 2 years of national service as the Chief Strategy Officer at MDEC. And in a previous life, I spent a bit more than a decade in venture capital, just kind of working with some of the biggest and fastest growing companies in the tech space in Southeast Asia. When I was in MDEC in the 2 years, it was very clear that blockchain is here to stay, and blockchain is going to be a key differentiator in terms of how developing economies enter this global market. So it was natural for us to kind of look at how we would facilitate that. So that's why, in our opinion, a centralized exchange is a very important bridge in terms of how, not just how users and investors will enter this so-called DeFi world, but also very important in terms of how institutions will be able to adopt it into their own portfolio.
Thank you, Dr. Fazli. Johnson, could you help us with an intro?
Thank you. Thanks again, Maybank, for having me, and congratulations again to all organizers for this event. So maybe a little bit about my background. I'm an engineer. Similarly, I've been involved in venture capital in the region. I've built companies mainly in the healthcare and the tech space. So CapBridge is my fifth company. And I founded CapBridge to help solve some of the growth challenges in the private market space when I was building companies. And I see the digitization of the private market space, the alternative assets, the crypto space as a natural next evolution. So at the CapBridge Financial, our mission is to better organize and to provide access to the private markets. So we have two parts of the business. The first part is a digital wealth management platform called CapBridge. And our tagline is invest like the top 1%. So the easiest way to think about it is that we are providing access to created top-tier private market products and to enable individuals to invest just like the top 1%. And we are moving towards democratizing access and working hard to fractionalize investment products. So what we're doing is that we're building a platform to provide the same access to our individual investors on what the institutional investors are enjoying in portfolio allocation to and access to these private market products. So we have 4 key products right now: fractionalized corporate bonds, access to top-tier PEVC funds like the names like KKR and Kakala Group, and Unicorn. So we did things like Grab, Gojek, SpaceX, and now we're doing Epic Games. So things like that, we can also provide access to alternative assets like ESG funds and digital asset funds. So basically, investor can now look and invest at these companies and at the smaller ticket size, complete with data room, documentation, and e-signing. And the second part of our business, very similar to Dato, is a private exchange, which is also a Singapore exchange, SGX backed, and also more licensed by the MAS. So our aim there is to provide a vibrant a private market ecosystem whereby we can enable fractionalized trading of financial instruments, secondary liquidity, and capital recycling. So the private exchange is now live. It is based on the public Ethereum blockchain, and we hope to build this more. And we've been featured in the MAS project Ubin. So in summary, CapBridge Financial sees the digitization of private assets, and our business is to enable investments via smaller ticket sizes and enabling the tradability of these private financial products. Thanks.
Thanks, Johnson, for your sharing. Samara, can I invite you to share a little bit about yourself?
Sure. Thanks, Mark, and thanks, Maybank, for having me. Thank you, everyone, for your attention.
My name is Samar. I've spent 20 years in banking and fintech. I started my career building trading systems at Goldman Sachs in New York. Since then, I've worked in wealth management and corporate banking in APAC. My last job was at Deutsche Bank, actually building the digital asset strategy and product delivery across the bank globally. And since last year, I've been head of APAC for a company called Talos. We are the leading technology provider of trading systems for institutions who want to access digital asset markets from one gateway in a familiar way, whether it's via a GUI, similar to like a Bloomberg terminal, or via APIs.
Thank you very much, Samar. So, gentlemen, we have a couple of questions that we'll be going through for the next couple of, for the next 1 hour or so. The first one is as follows. So every day we've basically read of nation states, the central banks, financial institutions, and commercial enterprises entering the space. What is driving this fundamental shift in institutional crypto adoption? I'll invite any one of you to touch on this as soon as you're comfortable.
Sure, I'll go. So I think there are a lot of different reasons for the trend of institutions coming in. If you talk about institutional investors, they're seeing exciting new asset classes. They're seeing wealth creation happening on the retail side. There are not just crypto, but other digital assets emerging with interesting yields. And so you're seeing people who want to do long-term value investing, directional investing, or arbitrage. It's the first time this financial innovation is coming first from retail and into institutional. At the same time, the FIs, the financial institutions, who've been serving their clients across all asset classes for decades, are now getting questions from their clients about support for these new asset classes. So they have to start building services around it. Corporates are interested because they're seeing new ways to raise financing via tokenization versus instead of equity or debt. And then you're getting new treasury solutions or ways to monetize your content and IP. And then tech and infrastructure companies are seeing this as an opportunity, almost like the Wild West, where you have a chance to build the pipes and plumbing of this new future and build services on top of that. And then finally, you have, like you mentioned, nations and central banks who are recognizing the power of some of this underlying technology. And so they're looking at things like CBDCs to improve internal or cross-border payments and capital controls.
Thank you. Dr. Fazli, would you like to add on anything to that?
I could probably add on a little bit, but I believe someone did an excellent job of summarizing kind of like the trends that we've been seeing, right? And really, there are two parts to this. Number one is proactive measures by companies and actors, and the second part being reactive measures by some other actors in the financial ecosystem. I totally agree that some companies are seeing the value in adopting blockchain for their internal processes, and whether that's a means of high efficiency of fundraising or access to this alternative capital market, it's evident because if you look at the global spend on blockchain solutions, that's gone from less than $1 billion to just over 6 billion this year, right? And projected to go up to 20 billion. That's just on enterprise solutions. So you see a very strong uptake and trying to figure out a solution within corporations. The second part is reactive, but it's even more important because as Amar pointed out, CBDCs, which is basically essentially a stable coin, but governed by a central body like a central bank, right? Without having to have a conduit like how Tether has it being asset backed by US dollars within their bank account. Also, they claim. I'm not sure. We could have probably quite a heated discussion over Tether's direction there. I believe that is going to be a very important policy signal moving forward because it also underpins how other corporations in the future will be able to on-ramp and off-ramp and partake in this new world of decentralized finance. Because essentially, if you have a fairly efficient CBDC that serves its purpose and is unbridled in terms of the sophisticated investor or the sophisticated corporate user or corporation being able to leverage these new ways of innovation, it makes for an extremely efficient path for capital movement. But it comes with some risk because crypto is borderless, right? And so I believe a lot of countries take that into account in their CBDC design. So it'll be very interesting to see how this plays out. The major superpowers in the US and China have very differing approaches to CBDC because they also start from fairly different starting points in terms of the digitalization of their economies. In China, nobody walks around with cash. Scanning a QR code and using e-wallets is very much second nature. The US dollar, internationally traded, and really still the reserve currency for most, if not all, nations and corporations. So how these two players at a macro level kind of take their path forward will, I believe, ultimately determine the state of cryptocurrencies that you will have in the future.
Thank you, Dato. All very valid points. Johnson, is there anything else that you'd like to add from your viewpoint?
Sure. So, I mean, the question is this a fundamental shift, and I probably break it down that, it's probably due to the whole digitization thing, and, the efficiencies of having the DLT, right? So if you think about it, it's quite a natural evolution. That, we have firstly the adoption of crypto, and then you have the digital assets coming in, and then this will actually unlock and bring a lot of familiarity to actually power and bring a lot of efficiencies to the other financial instruments, funds, and private markets and all, right. So I see this as a evolution, and it's a bigger trend about the push towards all these efficiency and the technology. So if you think about it, right, you can see in the earlier times you have the dematerialization of stocks and scripts, and then you have the digital music, you have smartphones, right? All these are very paved way towards the mass adoption. So in the current state, I think this is still early days. I think a lot of financial institutions, the sovereign wealth fund and all, are pushing towards this purely because of the efficiency gains, the cost savings, and all. And I also think it's important to note that the whole thing about cryptocurrency and technology is not the same, right? There are many ways to get exposure to this sector, mainly through making investments into the the technology, and not necessarily per se holding cryptocurrencies. So there are all these trends, and maybe just to share, right? I was reading a report on Ernst & Young. So they they interview about 250 funds, and right now it's only about 7% of the funds have actually some allocation into the crypto and the crypto related tech. So this includes the whole portfolio, and they typically responded that over the next 1 to 2 years, more than 20% of institutional investor will deploy money into this space, and 25% of the hedge funds said that they will increase their exposure to the crypto space. So in general, I think the trend is here to stay, and really these fundamental shift is what we are seeing as a real change with any new technology.
Thank you, Johnson. Those are excellent points. So over to question 2, and it's a question in which I think we're very blessed to have all 3 of you coming from different areas of crypto. So for each of you have different viewpoints. One is coming from the exchange, another viewpoint, institutional and infrastructure provider, and Johnson is coming from product capital platform. So the question that I have for yourselves is, in terms of what do you see as the makeup of the buy side and the sell side participants entering your area of the space, and why? Samar, maybe I'll start with you.
Yeah, sure. So it's been a really interesting journey for us, and illuminating, and very related to the last question you asked about who's coming in from the institutional side. We actually have 14 different client segments today, which is kind of nuts if you think about it. Now, our flagship product was a trading platform for the buy side. So initially, 90% of our revenues and flow came from the buy side, and they were initially from crypto funds, so digitally native funds, we say. Later on, we started to see new entrants who are systematic traders and high frequency traders. Now we have a lot of clients who are hedge funds, traditional multi-strat hedge funds, who are allocating small portions to crypto. And slowly we will start to see a few asset managers. But that 90% buy side flow has now become 50-50 with our other side, which is the sell side segments that we see. We now have onboarded on the sell side a lot of broker dealers, banks, OTC desks, custodians, payment apps, even retail e-trading platforms and gaming companies. So we are starting to see a lot of companies who already have their existing apps, and they're trying to enable services for their end customers, enable digital asset services, and they use many of our tools.
Thank you so much. Dr. Fazli, can I invite you to share on your side of and your viewpoints?
So we have a relatively smaller, more focused use case, right? Being a regulated digital asset exchange, and of course we're subject to the policy movements of how the Securities Commission in Malaysia is playing their role as stewards of this industry development. Cryptocurrency, whether buy or sell side, for the longest time, and I would argue, like, ever since the 2014, 2015 boom, when kind of this trend started coming here, largely dominated by retail investors, right? And of course, within that, you have a subset that become a lot more sophisticated, not just in their knowledge, but also in the tools that they use. So to employ APIs and then introduce bots for their own proprietary trading strategies. We saw more and more of that becoming evident in the market over the last 2 or 3 years. You also see a productization of exchanges themselves. So in the beginning they were very distinct, but as time went on, similar standards were adopted so that similar scripts or bots could be replicated across multiple exchanges. Now in the Malaysian scene, we understand that movement is slightly depressed because, number one, the Malaysian market is not unique, but it is distinct in the fact that there is no digital asset to digital asset trading pairs available to the investors in Malaysia. Right now, all pairs are through the ringgit fiat, and so that naturally kind of funnels down the number of participants who would be able to participate in one of 5 digital assets, being Bitcoin, Ethereum, Ripple, Litecoin, and Bitcoin Cash, whitelisted by the SC, against the ringgit pair, right? So what we're seeing more and more is that there are some corporates who are taking notice of this space. Obviously, even though as we speak today it's a slightly more depressed market for Bitcoin and overall crypto, but the general trend over long term is up and to the right. So how institutions will adopt this or have skin in the game or participate in the trades ultimately comes down to what kind of products we're able to serve them. Now, a great example of this is, for example, the CME, the Chicago Mercantile Exchange. They have a Bitcoin futures product, and that really kind of catalyzed a lot of institutional adoption, primarily because, and I respect that Samar and Johnson have shared that some hedge funds and everything have started going to the game, but as a percentage of their allocation within a portfolio, it's tiny, right? And this is counterintuitive because if you're allocating 1% of your portfolio,
Oops, I think we have lost Dato' Fazli. Johnson, maybe we jump to you and your thoughts.
Yes, thanks today. I will hope to get him back soon. So for us at the CapBridge, we, as mentioned, we have two parts of the business, right? So on our first side, CapBridge, the private markets kind of a syndication platform. Our buy side is that we are basically enabling individual investors to kind of get exposure to the private market. So if you look at the data, most of the time, those sovereign wealth funds and all, they allocate up to 25 to 30% of the portfolio to the private side. And in Asia right now, it's probably less than 5% onto the private side. So what we do on the CapBridge side, where we're seeing the demand, is to be able to fractionalize this assets. So previously these private market products, especially the unicorns, the funds, you need to have a very large check size. So typically 1 million or 5 million minimum. Now, through our feeder fund structure and SPV, we can actually offer it now to a larger segment for about 100K ticket size. So what we have seen is that a lot of this in the terms of the access to the private investments, directs and all, in the wealth management side, they're using this for asset diversification. Especially the second generation, the younger people, they like to invest directs into this. So we do have an app whereby they can place the interest and register for this. So in terms of the overall portfolio construction, what we're bringing now is to the privates in terms of having this as part of a X exposure. Then on the second side, on the private exchange, we are seeing quite a few of the issuers. We have a live platform now. So basically what we do at One Exchange is that we offer the option now to do a private listing. So what does a private listing mean? It means that the company is still a private company. And what we do is that we create a SPV, and you're basically having the SPV, and we're trading units of the SPV on our ORIMO exchange. So we've seen nice tick up in issuers wanting their customers to become a shareholder. Really having their the brand ambassadors and all having a stake there without the necessary full-blown IPO. And we've also seen like family businesses using our platform as a means to do some sort of a cap table clean up. There's a lot of family business now with the principals getting to the advanced age now, and they're thinking about what to do with the second generation and all. This is also a nice potential site for them to kind of do a cap table cleanup, especially most of the time they have the uncle, cousin, brother and sister type of thing to kind of clean it up. And we're also seeing that the demand coming from the ESOP side. So companies now, especially the VC back, they may want to have some sort of partial liquidity to kind of release some of it, and people are using our private exchange to kind of to facilitate this. Yeah.
Thank you very much, gentlemen.
Dr. back now, yeah.
Yes. So that was very interesting to hear from all three of you on your different viewpoints in the sphere that you have within the crypto industry. I'll jump first into point 3, which is really the question that most of our audience are coming from the background of what we call traditional FI, right? The learning curve in the crypto space is actually relatively steep. So do you have recommendations to the path of understanding this space and connecting the dots? So I think, given that we lost Dr. Fazli the last time, maybe we can allow you to start first, sir.
Yeah, thank you, Mark. And I'm so sorry, everyone. So I believe we faced a little bit of a technical hiccup here. But this is a great question because a segue from the previous one, right? So as institutions try to adopt it, and I was just making a point just now, I'm not sure whether it's before or after I lost the connection, but even if you look at hedge funds, it's a small proportion or small allocation within their portfolio that they allocate for what is arguably a fairly new and very different asset class, right? Even how you get access to some of these products, by that I mean the wallets that you will need to have in place, the internal security measures that you have to take to be able to protect secret phrases or access. It's fairly different than how they may have seen in other capital markets. So in simple terms, to have everything in the right place and all the SOPs in place seems fairly impossible to have for any fund or institution of any size. And generally what we advise with our corporations is that before you even look at your high-level strategy, which I'm sure you can develop with all the quants in the world, a small amount of play money, right? And by that I mean, just a couple of $1,000 US or equivalent, and just opening MetaMask accounts and then opening accounts on different wallets and exchanges, just going through that process, because that's fairly important to understand, because the native experience in crypto is really a departure from what we've seen in other capital markets, right? There are no reminders in place. There's no institutional brokers in place. If you're a high net worth individual, it's not as simple as calling your private banker and saying, I want to buy X amount or X dollars worth of this stock, right? Get me the best price. If I can drill that down to a very specific use case or very specific challenge that we've seen with some corporate players, is this idea of dollar cost averaging, right? As maybe an investor on their personal basis, they can one could afford as a day trader maybe to kind of dollar cost average. But when you look at an institutional player taking position, it becomes very risky. And of course, on the wrong day when the markets are extremely volatile, what corporates really want is to be able to lock in a price, and this is something that the current retail focused and retail facing systems do not necessarily afford. That's why we see a lot of OTC services mushrooming, especially down south in Singapore. So the use case and the strategies that institutions will want to take are not best served with what's available for retail investors. But ironically, you should go through the experience like a retail investor to understand these other nuances of entering, on-ramping and off-ramping into the crypto markets. And I think that's not something that you should wait for internal SOPs for. Like I said, fairly simple to do. But once you get into it, you have a new appreciation for a lot of the self-custody steps that you have to do for yourself.
Yeah, proof is in the pudding, right? And nothing like actually doing it to accelerate your own learning. Samar, over to you.
Yeah, sure. So I think I heard some really good points there. I was also going to say the same thing. Start your personal account trading and you will learn a lot of the problems that exist. But in general, there are a lot of differences, right? In the TradFi world, you've got the SWIFT network, you've got clearing houses, you've got central securities deposits, and you've got CSDs, and you have custodians and you have many exchanges, right? But in the digital asset world, all of these providers are different. So some of these middlemen don't exist. So you don't have the SWIFT network, you don't have CSDs. The custodians are all different names, and the exchanges are all different exchanges that are cloud deployed. So yes, there's a lot of learning. Everything's moving fast, and there's a lot of jargon. So my advice is you apply TradFi concepts to understand most of the jargon because they are actually comparable, and then keep an open mind to wrap your head around some of the newer ideas like decentralization and proof of work. I think that there are some really good online courses, and there is also great research papers that are being issued all the time. Please do read up on those. And the other comment I would make is when you're learning and upskilling within an organization, it can't just be your department that does it. All your departments kind of need to do it, because otherwise your compliance department won't be up the curve when you're up the curve. And so you won't be able to launch a product. And that's why learning together is very important. When you're finally ready to actually launch and come to market, and you're looking for companies to advise on what infrastructure pieces you need, there aren't any integration partners yet, right, that stitch it together for you, but you could come to companies like ours and we could give you some advice.
Thanks, Samar. Great points. So we'll throw it to Johnson. Johnson, would you like to have a crack at it?
Sure. Yeah, I mean, I probably echo the same that, from the personal basis, do get involved, get a MetaMask and all this kind of thing to kind of try this. I will probably say that I will break it down into different sectors of what we can do from the traditional finance side, because we also see ourselves from the traditional finance side. So probably at the management level, as a leadership here, one of the things which we've seen firms doing is that they're taking baby steps into going into this space. So one example is the Financial Times recently reported that the Nomura is actually launched a new subsidiary. So we've seen people and financial institutions setting up a subsidiary to get their toes wet. They joined the likes of Goldman Sachs, Citigroup, Bank of New York Mellon, all this, they have to set up arms to actually look into this, and typically quite separate. And one of the pitch angle that they are saying is that they notice that is really from the institutional clients wanting to get their also test their and get their feedback into cryptocurrencies, NFTs, and other assets, and it's really more from the perspective of diversification from just a traditionally run portfolio. So I think having these little arms and taking the steps towards this makes a lot of sense to me. I think it enables the right positioning and all. And perhaps as an asset manager, so moving to another group, as an asset manager, the things that I have been thinking of having conversations is on the whether crypto as an asset class, or whether or not you want to have an investment thesis into investing into the underlying technology, which is DLT, which you can have a lot of exposure to various ETFs and all, right? So again, very simply, how to get your path in as a financial institution or as a regulated entity. We'll be taking all these methods at the company level, and obviously at the personal level. Highly encouraged to kind of buy some of this and see how things work then.
Thanks, Jonathan. So I guess, gentlemen, as a follow-up question, say an investor has done their due diligence. They've weighted the risk return of the trade. In each of your unique areas of crypto, can you kind of share what are the infrastructure that is required to action the actual investment? So we'll open the question first to Dato to start off.
Yeah, so in terms of infrastructure, there are three parts, right? Number one, assuming that the investor has fiat, right, whichever fiat currency, you need to have an on and off ramp mechanism. That's, I guess, at its very core, what digital asset exchanges like us in regulated markets provide. That's, I guess, the most obvious proposition. The second is that you need a custody arrangement or provider of service. Typically, if you use a centralized exchange, they would have already engaged in a custody provider, but there are some institutions that would opt for their own proprietary custody arrangement. Now, from this, you will, and I don't think we have to dive too deep into this. A lot of it is on the internet. You have an option between cold and hard wallets, right? So to look at whether procuring some of the services for yourself in-house or to engage a third-party service provider to do that, depending on your strategy, is another key consideration that an investor should make. The third is really in terms of like how you manage your portfolio, right? As I said, there's a lot of scripts and bots and software essentially that's employed into managing this portfolio. And the key difference between crypto versus, I think, what I would call traditional capital markets is that it's a 24/7 market, right? It never goes to sleep. And when Asia is asleep, the Americas start trading and vice versa. So there are very different considerations than if you were playing in either the fixed income or commodities or stock markets. So I would say that these are the three main components in terms of infrastructure that, again, maybe at the onset, an institutional investor may not have all the answers, but it becomes clearer when you start using the tools which are available to retail investors, because you would naturally wonder whether the same tool would be usable at an institutional level.
Thank you very much. Samar, over to you.
Sure, I heard a lot of good points there. Thank you. And so I would agree that custody is a very big prerequisite. Many big institutions who are maybe running $200 or $200 million or more worth of a portfolio, they wouldn't maybe always be comfortable storing it on an exchange. And so then what will happen is they'll either use a third-party custodian or they would self-custody with technology. And so those institutional grade solutions are out there now. Also, understanding which liquidity venues you want to trade at is important. There are differences between the public exchanges and the OTCs in terms of the coins they offer and how regulated they are, and whether they can give you credit lines versus requiring you to pre-fund. Those are all pros and cons. And then when you want to face the market as an institution, how do you connect to all of this liquidity and trade these assets and do price discovery and maybe algorithmic execution? And so that's where our company comes in. So that's an area that we focus on and we solve for, and we think it's an important piece of infrastructure. But there are others that weren't mentioned yet, right? Like if you're a service provider, how do you ensure your know your transaction or your AML and your travel rule compliance requirements? And there are also institutional grade analytics providers solving that in the market as well, given the transparent nature of blockchain compared to even cash. A lot of these infrastructure pieces are being solved, and they just need to be stitched together if you're an institution that's looking to action on an investment in crypto.
Thank you very much, Samar. Johnson, over to you.
Yep. So very similarly, right? So for us at the Cadbridge, at this point, we're doing the settlement via fiat. So we are also very big believers in custody, like what Samuel and that also said. I think this is a very big one that there's like what Samuel said. There's a lot of new tech now. ZKP and MPC and all this kind of stuff. And it also is very dependent on the technology. So you may know in Singapore, there's a lot of the cyber risk and all those kind of guidelines now. How do you select your vendors, the technology risk and all. And I think the other part would be to kind of integration with the traditional systems. I think in terms of the internal reporting systems, how do you report back to your client? How do you give them assurances and the reconciliation? I think all this stuff, has to be solved as an infrastructure, because obviously the flow and the service level needs to be of certain standards. And like what Samuel said, right? I mean, it has to do also with regulatory clarity. Regulatory clarity in terms of all the AML, KYC, travel rules, and I'm sure very similar. They're going to do the best execution risk and all this kind of stuff. Whether or not how this is the tax, in terms of the taxation and all. So I think all this infrastructure, not just infrastructure, but the whole industry in terms of this as an alternative asset needs to be really nailed down. So for us, we are solving this in the traditional way, and we're gradually extending this, to be able to do instantaneous settlement and all. And I think these are all part of our roadmap here to kind of push this. Thanks.
Thank you, Johnson.
Could I add on a little bit to that, right? At an academic level, what we're discussing today makes a lot of sense. You need to have the right infrastructure in place. Things have to be safe. And of course, coming from traditional finance, a lot of us on this call today also very much respect the safety and security that comes with regulated markets. But let's also be very practical about this. If you look at Bitcoin price today, right, and you look at it 2 years ago, 3 years ago, 5 years ago, there's a huge sense of FOMO that kind of dawns on pretty much every investor, right? So what we've seen in the market is that, yes, a lot of this, on the retail side, you have a subset of people who are saying, anti-institution outright, right? Like let it be, and entirely like the Wild West, we'll be responsible for ourselves. And of course, they cry when things don't go their way, right? And that creates a big problem for the regulator. But on this side here, you can argue that you have fairly sophisticated investors who know what they want and know their risk appetite and may have direct or indirect measures to be able to manage their trading strategies. And there's a very real need for them to be able to get into the market as quick as they want to get into. Now, when Johnson mentioned the regulatory clarity, it becomes quite difficult for them to play, quote unquote, play by the rules, especially when the rules have not been set in stone yet. I would put it to you and anybody on the panel today, let's start a hedge fund tomorrow, right? Let's start a VC fund primarily focusing on crypto, on crypto assets. And that makes a lot of sense to LPs that you want to bring in, because you could have a huge hedge fund, but once they learn that crypto is significantly different from other capital markets, they will want a very focused team that has very proprietary knowledge and information and skill sets and experience within the space. You try to do that in almost any market today, you will be met with so much scrutiny because the exposure is almost entirely into this alternative asset class. So going into it in this very organized and structured way, no matter how much you want to do today, it's actually a monumental task in itself, right? Whether it's Singapore, Hong Kong, or even Dubai today, setting up a proprietary fund focusing on only crypto assets is not very straightforward and it's met with a lot of scrutiny by the regulators.
Thank you, Dr. Fazli. I think it's very interesting that you brought up regulation, because the next point is actually on regulation. So for this question, what we'll do is we'll switch it up. We'll ask it to Johnson first to kick it off. And the question is, over half of the world's central banks are exploring CBDCs. Several countries have announced consultation papers and bills upcoming on crypto. So what role or areas do you see regulation playing or can play to encourage greater adoption of cryptos by institutions?
Yeah, thanks. And that I do agree, right? It's one of those things whereby the technology is moving faster than what is there. And I'm reminded that it reminds me of the whole in the healthcare space, the genetic testing, right? I mean, this was heralded as the best thing. You can predict a lot of stuff, but this the FDA versus the doctors talking, and we're seeing the same things, right? How to manage that it's a perennial problem. So if you do say in terms of the regulation, my view is that this is going to be quite a patchwork. So it depends on the jurisdiction, right? So some jurisdiction do recognize the tokens as legal tender, but some jurisdictions don't, right? And I think the workaround a lot of people have been doing is to have other types of legal structure to effect this, and it will fall down to the jurisdiction, the common law, and all these kind of things. I think in terms of the CDBC, in terms of the regulation, I mean, one of the things that I've been closely watching is the DeFi space, right? So this is something very new. I think there's a big discussion now about how to regulate even the DeFi space, because by definition there shouldn't be, it is all purely decentralized. And now the regulator side is even suggesting that they should even regulate the technology. So I think this remains to be seen. I've seen other regulatory regimes like looking at the DeFi as similar to the CIS scheme, like a fund. And so they want to regulate the fund manager, which is the tech provider and all. So I think this will be increasingly scrutinized, and I kind of feel that there will be a lot of case by case. So there won't be a blanket rule to actually cover all. I think it'll be each specific case because of that, and the regulators will probably push this risk down to the to the sponsor of these products, and make them have a legal opinion on whether or not this is is suitable or things like that. So I will probably say that the evolution will be quite not uniform, and it's just a matter of time, right? I mean, we've seen the regulators pulling in. I expect the whole AML KYC, like what Samuel said, the travel rules and all this kind of things to kick in, right? So it will be one of those things whereby both have to do, and the best in class players will have to adopt this while trying to manage the commercial aspects.
Thank you, Johnson. Samara, what do you think of regulations and adoption of crypto?
Yeah, sure. I heard some great points from Johnson. So look, first of all, as a company, Talos, we're very pro-regulation. I think regulators are going to make or break this whole thing for institutions, right? And all of our clients are buttoned up. Many of them are highly regulated, and they want to ensure that they stay in bounds. So all of us want to get rid of the bad behavior that we read about, right? Whether it's market manipulation or scam coins, the pump and dump schemes and hacks. We need to ensure that this becomes a responsible ecosystem. And for that to happen, we need regulators to legislate and more institutional money to come in to stabilize everything. So that's our stance. Let's also define digital assets, right? So different regulators, as mentioned by Johnson, are going to legislate differently. You might have some folks parking tokenized assets under securities law. Other people will see CBDCs or stablecoins as e-money. And then other types of speculative virtual currencies will have their own rules maybe. But what I've seen overall is that different countries are moving at different paces, and which is a bit frustrating. But I totally understand how hard it is for regulators. Apart from the upskilling side, it's a very delicate balance of allowing innovation and building the future of finance, while at the same time protecting investors from like bad things and losing their arm and leg.
Thank you very much. So I think in the interest of time, we probably have time for one last question, and then we're going to open it, take a question from the floor. And the question that we have here for the panel is there still a role for TradeFi, wealth managers and advisors in the digital revolution? Where do existing players need to consider making the pivot? Johnson, we'll start, sorry, Dr. Fazli, we'll start with you first and your thoughts.
Yeah, I'm a fan of all of this becoming regulated to a certain degree, right? To a practical degree, in the name of investor protection. When you ask, is there a place for TradFi in this, let's just call it the DeFi future? I would say absolutely, because cryptocurrencies and decentralized finance at its core, the way they're designed and the way you interface with them right now, it is an unfair game because it is something built for the very tech-savvy and tech-sophisticated user, right? This is not even like IRC in the 90s, where you can learn a few lines of code and be able to log on to different servers and start channels and all that. It's way more than that. And now for the first time in a long time, this innovation is touching on the financial networks directly, right? So if you think back to, again, to make it very practical, if you've had a great experience with Maybank, ASEAN bankers, or the private wealth service or private banking, are you within the first 200 or 300 million people who can and want to manage your own custody and want to buy Bitcoin at the price that you want to buy and use the services how you want to use? Or are you an investor that believes that this is going to go, I guess in crypto speak, to the moon in the future, but you want a professional to be doing it for you, right? So I believe a lot of this, the majority of the world will still want convenience over self-custody and self-security, and self-sovereignty in that sense. So there's a lot of elements that traditional finance has gotten right over a long time, after a long time of building the service-led industry, right, and front-facing industry, that I believe will then translate over to this DeFi-based world. Now, having said that, does it mean that if you're the first bank to be able to serve your customers well and make them happy with a very well thought out strategy and very a full service offering in terms of crypto, will you fare well? Well, no, I would argue no, because there's also pressure coming from the other side. Some of the players in the crypto space, whether it's Celsius, whether some of the guys have really been able to start building a bank in crypto, they may also figure out the best way to provide this human factor and personalized service, and maybe in a much more efficient way, because today we all live with phones in our pockets, and a chat is as good as a call today, right? So I think it's not a one-horse race, but definitely it's not the future of DeFi, if I may say so. It's not a totally limitless world dominated by the tech bros in that sense, right? It's going to move mainstream, and then people will value convenience over self-custody and control.
Thank you, Dr. Fazli. Johnson, could we hear your thoughts on? Sorry, you're muted.
I'm sorry. Yeah, so my thoughts is that we're still in the early days. Probably for the traditional finance is also where we're coming from. It's all about the two things: providing exposure and providing more choice. So probably what we're doing on our side is to basically like what we mentioned, there are many ways to get exposure, but be it directly into crypto or the adjoining technology and all. You can get exposure to various other financial instruments now. I think over time this will play into providing this choice as an added competitive edge. I think more and more financial institutions through this will have this as part of their alternatives as part of the asset diversification. So I think it will be sold as part of a good well constructed risk mitigated portfolio. And I think as the technology evolves, as what Datuk say, right, there'll be more and more convenience, there'll be more and more direct apps and now to get these exposure, and there'll be more and more products in this space, be it the NFT space or asset-backed securities or STOs or whatever you have here. Yeah.
Thank you. Samara, your thoughts on financial institutions and the space?
Yeah, I heard some really good comments. Thanks, everyone. No, look, I believe that there is definitely a role for TradFi institutions and wealth managers and advisors in this new revolution. Absolutely. First of all, you have, and when I say you, I'm talking to the TradFi institutions and wealth managers. You have the trust and decades-long relationships with these people, right? Your clients. You also have balance sheet, which many of these startups don't have when we get into the world of lending and leverage and things like that. You also have an aggregated view across all their asset classes, right? And that's an advantage because they want to see their wealth in one place. Ideally, customers don't want another 10 apps to open, but they're forced to right now. So once you guys also manage to bring your products to market and get licensed and do it in the correct and responsible way, I think that there will be a big role to play for the incumbents as well. But in general, all the existing players need to ensure that they come to market with all the products that their clients need, right? Whether it's research, custody, brokerage, reporting, tax, fund administration, risk management, lending. All these services are things that banks and incumbents have been doing for decades, and the fintechs have not. And so this is your superpower, and hopefully you can adapt these services for the new asset classes.
Thank you very much. So we have the last 5 minutes before we close, and I guess we have one question from the floor that we want to take. If I was to best phrase it, perhaps it's best done to ask, what's the remaining hurdles that crypto industry needs to address in order to further institutional adoption? Can we start with Dr. Fazli, please?
Yeah, so I don't think there will be a point where all the hurdles have been met, right? As the technology evolves, as much as new opportunities will be uncovered, new problems and challenges will also arise. So in the near term, what I believe and what we've seen from a lot of potential corporate clients that we've met, number one is that they want regulatory clarity, right? In the Malaysian context, crypto is treated as a security, it's categorized as a security, so naturally falls under the ambit of the Securities Commission. However, there's always an element of the Malaysian ringgit fiat, and so that falls under the central bank. So in jurisdictions like Malaysia, when the two regulators are not aligned, and I don't think corporates want a particular outcome, they just want an outcome, right? They want clarity of outcome. It will really slow down institutional adoption tremendously. So if you compare that with, for example, Indonesia, where it's treated as a commodity, yes, by absolute numbers, there are more corporate accounts or accounts not linked to direct individuals, but you don't see huge corporate participation. So it may also not be the case that a unilateral regulator can solve it all. I think at the end of it, what I think from a lot of different markets that we've been observing is regulatory clarity in any way, shape, or form, when clearly communicated to the corporate citizens of corporate market, is what they need to be able to chart the next strategy. Because otherwise, especially if you're in areas that I believe Maybank is active in, these are all growing markets, right? Crypto is not the only way to make money or to appreciate wealth. So it becomes probably an untenable a risk to kind of take on if you don't know for sure that this is something that you can serve your clients with for the next 5, 10, 15 years. So if there are regulators listening, I hope that that we can continue to have the conversations. And because at the end of the day, that's what I believe the corporate market needs. It's the rules of the game, and I don't think they favor any particular rules in that sense. It's just to have clear rules in the game now.
Thank you, Dr. Fusley. Johnson, can we hear from you?
So I would probably say that is an iterative process. So for us at CapBridge, we work closely with the regulators. So obviously we have conversations with them. We get involved in their the FSTI and things like Project UBIN. So doing kind of use cases and showcase to prove the technology, to give comfort about the gains that you can do. So it is going to be a hand in hand thing. And I think the industry and the ecosystem as a whole needs to work together. I think the main thrust about the whole digitization, DLT, institutional crypto is here to stay. And I think it's is a very exciting time for all of us in this space. We are thinking that the public space is this, and the whole the whole private markets and all, there's a huge thing. You can basically, if you think about it, you can tokenize any the real estate space. You can tokenize the infrastructure. If you can make this into a regulated security, with all the main issues being addressed, you can recycle a lot of the capital, and I think this is where more capital efficiency and all these benefits for the industry and for the capital markets is what we're all striving for. So yeah, it will be an iterative process, and it will be firms working together to push the envelope. Yeah.
Thank you, Johnson. Samari, our last panelist for the day.
Sure.
The mic is yours.
Sure. So look, let's first take stock of the fact that the industry has come far, and we have solved some of the problems that maybe 3-4 years ago weren't solved, right? Whether it was custody, accessing liquidity, some of the AML stuff. But I completely agree that the biggest crux is regulation and licensing pathways, number one. Number two is around education and upskilling at all areas, right? Whether it's folks in regulation, folks in compliance, folks at the leadership of the different financial institutions. That's another one. And then finally, when I think about like what makes a market more mature to bring more institutions in, how do you get the maturity? I think about credit, lending and borrowing, derivatives, prime brokerage. As more of these services mature, which some of which we're missing, I think that it will also stabilize and grow this ecosystem.
Thank you, gentlemen. So this brings an end to our panel discussion on crypto. It was my joy to and honor to moderate this panel for today. If I had to kind of summarize our key thoughts, definitely like to thank our esteemed guests on the panel for sharing their experience and knowledge of us. In closing, it can be said that with multi-billion-dollar market capitalization, crypto is here to stay. It's not going anywhere. Nation states and financial institutions should and must embrace crypto in order to remain relevant to current and upcoming generations of consumers who are born into the digital revolution. We no longer live in a world where our central place in finance can be taken for granted. No one knows for sure how the crypto revolution will unfold, but we should all be rooting for its success, because crypto was meant to democratize finance the way that the internet democratized information. With positive regulation and increased adoption, crypto can be mature and mainstream. Thank you, everyone.